Well, oil prices fell by just 3 cents in 3 days as traders and investors weighed the recovery and demand against supplies. For the week, oil prices were down 6.5%, prompting the question, how low can they go? And with OPEC meeting next week, what kind of response will the price drop bring? Carl Larry is president of Oil Outlooks and Opinions. He joins us today from Houston. Carl, it was only a few days ago you were saying the markets looked for several days to find reasons to get the price to $74 or $75. Now just getting to 70 would seem a struggle.
Well, it does. The thing is, though, is that we're finding a baseline here. You're finding a bottom number right now, and that's fine. I mean, considering it's a holiday week, considering that, we have a lot ahead. I think you just mentioned going into the OPEC meeting, you're kind of like looking at, a reason to kind of tighten up the spigots a little bit here. So it should be interesting.
OPEC likely to do anything? They seem to be happy with oil in this $60 to $70 range.
They're happy with this oil in $60 to $70 range, but Michael, the key here is not so much the recovery in the economy on a global scale, I should say. It's more or less about the U.S. dollar. That barrel of oil is worth $70 right now with the dollar where it's at. If the dollar starts to decrease and we see any kind of run on the dollar, that oil price could just become a lot higher based on that.
And what's the likelihood of that? Is that traded into the price at all right now?
It is, and I think that's what people are looking at. I think when you look at the numbers of the recovering economy, when you look at the numbers of demand, whether it's coming from China or just all of Asia, that's one thing. But when you look at the price of the dollar, I think that's starting to play into a lot of the action right now in the markets. Again, the weaker dollar, the stronger the barrel of oil, or even the price of gold.
All right, in terms of oil itself, what factors are going to influence the price besides OPEC over the next couple of weeks? We're at the end of the summer driving season. Refineries are switching over. But at the moment, we're very strong in terms of inventories of heating oil. Doesn't look like there's a lot of places where we're going to need any extra oil. Demand isn't likely to really get strong.
Yeah, I think you're right on that one. I don't think that you're going to see a lot of strength in the oil. Again, there's a lot of other factors that are playing into the price of oil as we go further into the year. Again, I just mentioned the dollar, the strength of the economy, that'll play into it. Regardless of how we see oil now, oil and oil demand will recover. Stockpiles right now for distillates are really great, but gasoline looks a little tight, and it's going to be a lot worse when we get the economy rolling again. We start seeing jobs numbers start to climb again.
But nobody's driving right now. I mean, driving went down over the summer. We don't see the same kind of demand that we've seen, and the driving season is over.
You know what, Michael? There's a great point. We haven't seen a strong number for the summer as far as gasoline demand goes. But if you look at the whole picture, if we look at 2009, we're still averaging over 9 million barrels a day. And on a big picture, that's probably in the top 3 or 4 that we've seen on record. So in the big picture, we're still doing pretty good. As far as individual weekly numbers, we've probably seen drop-offs over the last couple of years. But as records are, they tend to fall and they tend to be broken as time goes on.
All right. In terms of oil, we've only got about 30 seconds left.
Sure.
Sooner to 70 or sooner to 60?
Michael, sooner to 80.
We're going to shoot right through 70 then.
Yeah, we'll come back right through and right on to 80.
How long is that going to take?
End of the year, I'd say. Definitely end of the year.
All right. Well, we're going to continue talking about the energy complex with Carl Larry and find out what he thinks of other distillations, shall we say, things you can do with oil, given the weakness in demand. Also, what's the outlook for oil companies and refiners? A closer look coming up next. You're watching Taking Stock on Bloomberg.
We are importing 4.5 million barrels a day from OPEC. This would get 2.5 million barrels for you if you did those trucks. You don't convert anything. You don't retrofit anything. You go to new vehicles, and that creates a great amount of jobs. And the fuel is 40% cheaper than diesel.
T. Boone Pickens, who wants Congress to give tax credits for vehicles powered by natural gas in order to reduce U.S. oil consumption. Well, we're talking with Carl Larry, the president of Oil Outlooks and Opinions. The economy already doing its part to help reduce oil consumption. We were talking about that. And natural gas is certainly cheaper than oil right now. We're just around $2 at the moment, and it doesn't look like it's going anywhere.
Yeah, it's going to be tough. There's again, it's something we talked about, touched on with distillate. You have a lot of supply and not a lot of demand, especially going into a winter season here. We can hope for the best, but even with the storm or a cold winter, you're still going to be going into next year with a lot of supply. So it's going to be tough. It's going to be tough. You're going to see prices probably stay somewhat low for the next couple months, for sure.
So you probably don't want to be investing in gas companies. Is there an oil company you would like at these prices?
Well, oil companies are going to be good as long as they're producing oil. I think that's the key here. A lot of people sometimes get lured into thinking that a refinery is what you want to get into. But you're looking at the major oil companies like the Conocos or the BPs or the Shells. It's definitely something you want to look at, especially oil growth. There's something on the refinery side you might want to take a look at, though, is maybe some of the smaller refineries, the more closely held ones like a Holly or a Tesoro. As margins continue to drop, and they probably will in the winter, we just talked about supply here, they could become very attractive for who knows who wants to get into the physical side, but definitely targets.
Well, what do you like about Tesoro, ticker TSO?
Well, I think that they're well priced. I think that they do have a stable operation. They have a good set of refineries. It's just, it's beyond their control right now. Its margins are just dropping so far, so fast, and you're headed into a winter season where usually they make money on heating oil or distillate, and it's not going to be there this year. So, again, it's a problem with the market. It's not a problem with the company. So a good company might be having some hard times.
As times improve, then things might get better for them, because at this point, we showed on the screen there, pretty much everybody's got a hold or a sell on it.
Yeah, I think that the key is that they could get better, but my key is that will they be bought or taken over or seen as a value to somebody bigger and better at some point? And I think there's your biggest value going ahead. They've got to come down a little bit more, and it's an attractive price.
Is that the same strategy you would employ in looking at a company like Holly?
Exactly. Again, the value of the company is there. We all know that sooner or later it'll rebound, but until it gets to that rebound point, where's the value at? Is it an attractive buy?
The stock down 19% for the year, up 24% though year to date. They seem to have, done something to change the way investors perceive them.
Well, I think they're good stocks. Regardless, they are good stocks. I just think going forward, you're going to find a very hard season. Past couple of years, we've seen gasoline margins drop down to almost negative numbers, actually real negative numbers, and now you're probably going to see the same thing happen with distillates. Considering the supply, considering the demand, it could be where a lot of these refineries just don't make any money at all this winter, and there comes an opportunity.
Because the price doesn't go anywhere, you can buy in, and then next summer, when the summer driving season comes along, they begin to look attractive.
Exactly. So you're gonna catch these companies on a low going forward, and that's where you want to catch them. You want to catch them low because at the end of the day, you're still going to need them, and you're still going to need their products.
Buy low, sell high. Somebody told me that once. You say these two companies could be takeover plays. Do they have to be? Are we getting to a point where to make money you've got to consolidate in the refining business?
I think they are takeover plays just because of their price and their value. Is there a need for consolidation? Absolutely. And I think that's what you're going to be looking at here. So you have your bigger refinery companies like the Conocos or the Valeros, maybe looking at these smaller companies in themselves. But there is a need for consolidation, especially the way these margins are running. And, it's just hard to make it through the next couple months, especially with credit so tight still.
And nothing at this point that you would look at in the natural gas sphere, or is that also a possible play for the future?
That's a toughie. Natural gas, unlike oil, it's set here in the States. It's bounded by our boundaries. There's not much you can do with it here. So the more we find, the more we produce, the more supply we have. It's just always a matter of demand here. And right now, it's just tough to see any kind of play going forward.
All right, and then in terms of heating oil, we didn't mention that. And I'm not saying if there's a heating oil company you would buy, but is there going to be any price action there? There's an awful lot of it around. It gets very important this time of year, but are we going to have a better year for heating oil, barring the winter of all winters?
No, is my short answer to that. I think as far as heating oil goes in the whole distillate arena, what we're really looking for is some kind of demand from Europe or Latin America that can kind of carry us through. That's where we're thinking is going to be the big play. Domestically, it's just going to be tough. Obviously, outside of heating oil, diesel plays a big part in that too. And it's going to be hard to see any kind of V-shaped recovery this winter. Maybe early spring or say late spring or early summer, we can see something happening. But right now, it's going to be tough through the winter months.
All right. Carl Larry, president of Oil Outlooks and Opinions, joining us from Houston. Thank you very much for being with us today.
Michael, thank you.